Well, good afternoon. Good afternoon and welcome to another Webinar Wednesday hosted by the California State University Bakersfield Small Business Development Center. Again, good afternoon. My name is Kelly Bearden. I'm the director of the center and I'll be the host and moderator today. Got a great program, a wonderful guest, and a great topic to talk about that we have really not spent much time talking about, and that is a lot of the normal traditional business financing that's out there. A lot of projects going on, a lot of things happening. So welcome to Managing Your Small Business Beyond the Pandemic, number 122. Today we are actually live at the Valley Community SBDC in Clovis, California, on the campus of Clovis College. It's great to be up here in the central part of the San Joaquin Valley. Meeting today and having Craig Howells on, and we'll bring him in just a little bit. So some of the key programs that we're going to touch on, and not so much happening with the key programs these days, but just some of the things that are going on, just kind of a recap. One of the programs that is open that we have shared on our website, or shared their website the last 2 weeks, not doing it today, but it's the California Performing Arts Grant. And this is a grant program that is open to the performing arts. It's a first come, first served basis. And you could see lendistry.com for more information. So for nonprofits that are in the performing arts segment, perfectly good opportunity to come up with some grant funding to help you throughout what's lingering as far as the pandemic. Our California Dream Fund remains open. And so the California Dream Fund is still, if you have some interest, you can contact us at SBDC, csub.edu, or at Bearden, Kelly Bearden, at csub.edu, and we will put you in contact with our regional and put you on the wait list for an upcoming trainings program through the California Dream Fund. The State Small Business Credit Initiative is still moving forward, have about 5 of these particular state programs up and running at this time. A lot of excitement being generated for what this program is going to do. It's $900 million coming to the state of California. And we will have guests on from both of the funding agencies throughout this summer. One of those funding agencies is the California Pollution Control Authority that does business financing programs out of the state treasurer's office with California. And then the other pool of money that is going to be available, part of that $900 million will come from the iBank, which is a program of the Governor's Office of Business and Economic Development, or GoBiz. So we'll have a lot more on that later on. A lot of the programs that are going to be happening, it's an acronym I'm not really fond of, SSBCI. It's almost like an eye chart that's redundant S's. But they will have startup money available for disadvantaged community and individuals, reaching all the way up to the CalCap program, which is a program by the Pollution Control Authority. They also have a really unique program that is called a collateral lending program, whereas collateral support is provided. So if you have a small business loan, and Craig's going to get into a lot of this stuff today, but if you get a small business loan, you might be short in one of the key aspects, and that's the collateral. There might be a way that this program can lend that support for the security or the assets pledged in that collateral. So a lot more to come on that in the next few weeks and next couple of months as that becomes available. Our Kern County Micro Grant Program is open and remains open. A number of simple 2-page eligibility application, a lot of contact information, and then to see if you're eligible. We'll cover the eligibility just momentarily, just a little bit today. Mono County's Grant and Forgivable Loan Program is open. Jeff Simpson, the Economic Development Manager there, is the person to see. The Employee Retention Credit remains open retroactively going back to the fourth quarter of 2020. The program did end from a program perspective on September 30th, 2021. We've had businesses go back and realize that they were eligible for this credit and actually filed amended 941s, the quarterly federal payroll tax returns, in order to take advantage of the employee retention credit. So that kind of is something that's still available. And also the Cal Savers Mandatory Employment Retirement Program. So that's the mandatory retirement program through the state of California that employers that have 5 or more employees are required to actually move forward with that. And the date to sign up was 6/30, but it's something that you're going to want to get to right away. Okay, got that out of the way. So what's up today? Today, July 13th, 2022. Well, I got a little birthday greeting today to discuss. So today is a gentleman named Bill Carney's birthday. And Bill is a mentor, former boss of mine. He's really an economic development guru for many communities in California. When he was working as a director in economic development, worked actually one of the greatest economic developers I've ever met, and really was a great mentor to me as I kind of navigated through this SBDC career of mine. So Bill's birthday is today, and I wanted to wish him a happy birthday. It's been a long time since we've wished somebody a happy birthday on Webinar Wednesday. So I wanted to wish Bill a happy birthday. I had some great times with Bill, and really one day in particular stands out because I remember I really got high with Bill one day. And when I'm talking high, I'm talking about a little hike that we made up Mount Dana in Yosemite National Park up to 13,061 feet. And there's a view from the summit of Mount Dana looking east, and there is Mono Lake, the very picturesque, beautiful Mono Lake, about probably 7,000 or 8,000 feet below the summit of that particular peak. But it was a great hike, a wonderful time, and a great person who I really wanted to reach out and just wish him a happy birthday. I haven't talked to Bill in quite a while, and his birthday, I think Bill's birthday is like a 70-ish birthday, 75-ish, maybe even a couple more. So Bill, wherever you are, happy birthday. So finally, a birthday greeting. We got one on a Wednesday to get out, and it's Bill Carney. Thank you. Capital Quarter. So what's up today with our Capital Quarter is our special guest is going to be talking about a lot of SBA and USDA funding, a lot of other things that are going on. We're going to touch on our economic corner, which remains focused on inflation, new inflation numbers out today, and also the threat with recession. Our marketing moment today is going to be done by our marketing maven, Maureen. So, you know, when I'm in charge of it and I throw a couple of TV commercials on there, see what Maureen can do. And update, we gave you an update on the remaining programs. That's great. If you have questions afterwards for Craig or any of the other things we discuss, feel free to throw them in the questions box. Our resources today and some of the other features that we work on today will be in the chat box, so feel free to use the chat. And no poll today, no poll. Occasionally we do that, no poll, but our marketing moment will give you the opportunity to interact and to use the chat box. More on that when we get to that in a few moments. So with our economic corner today, our side of the relevant economic news for small business owners that you need to know about is inflation hit an annual rate of 9.1%. So 9.1% is the highest amount in 4 decades, as inflation continues to be the main economic driver for economic policy in this country. And really a lot of the things that are happening are kind of being driven right now by inflation. Inflation is also continuing to be a threat because of housing increases. And so we're starting to see in both rental and also the cost of credit. So for those that are looking to refinance or purchase a mortgage, those costs are increasing, and housing increases with rents, leases, and the cost of capital threaten even more inflation. So the inflation today pretty much sets the stage for another 0.75% interest rate hike by the Federal Reserve when they meet again. So last time they met, 0.75%, another 0.75%. We've looked at what their estimates are going to be for interest rates, and those are going to be above what they had anticipated. So we're looking at higher interest rates and higher cost moving forward as we try to get inflation under control. The Federal Reserve working on that, I'm sure, right now. So how does that affect also other parts of the world? We talked a few weeks ago about, inflation around the world in some places where it's much, much worse. For example, I think our example 6 weeks or 4 weeks ago was Turkey. And Turkey had an inflation rate of not 9.1%, but over 70%, which was the 6th highest in the world. So what's happening in Canada and potentially Europe? Inflation is major factors there, and they're both looking at rate hikes as well. As a matter of fact, Canada had a rate hike by their central bank of about 1%. So we're starting to see globally that inflation is being a huge problem, and it is continuing to be so, and the new numbers continue to hit higher. And so why is inflation such a big issue? Because the Federal Reserve has come out and said that they will do whatever it takes to curb inflation, even if that means the economy sinking into a recession. And there's a lot of things that small business owners can control in their business, but general economics is not one of them. And recession, if it's a hard hit recession, will and can affect your business, and really is something that you need to be looking at right at this very moment. The threat of recession is something that is going to potentially hammer you down the road. So that's a little bit of Economic Corner today. We talked a little bit about the Kern County micro grant that is available. You can contact our office. California Dream Fund continues to go through. And actually, you can actually send us an email directly now rather than going through the lead center at UC Merced. But again, the California Dream Fund is a training component, business plan, and then also consulting, of which then you have an application that goes to lendistry.com, which will fund businesses an initial startup capital of $5,000 or $10,000. So entry into the training doesn't necessarily guarantee that you're going to get that funding, the capital funding, which is in the form of a grant that does not need to be repaid. But again, the California Dream Fund, the way it works is you complete a training, write a business plan, and receive technical assistance through consulting. And then your application process goes through lendistry.com in order to maybe qualify for $5,000 or $10,000. Seed capital is a good thing to have, but that's the training, the consulting, and the business plan preparation might even be worth more. So we've been talking a lot about this particular program. The State Small Business Credit Initiative was initially $1.1 billion. It was reduced down to $900 million because of the infrastructure bill. But there's a lot of the programs that are going to be coming, so just stay tuned for that. If you're interested in some of the topics in more detail, such as the California Dream Fund, we also have HR and California law updates, and a great presentation on our economy back in May by Dr. Mark Evans. These are all available on the CSUB SBDC YouTube on-demand channel. So our YouTube channel, CSUB YouTube, recent topics, there you go. A lot of really good ones, including going back to 2017 with All Signs Go Cash Flow by one of our Cal Poly consultants, Jenny Inholm. That was fantastic and really relevant when cash flow is such an important issue with inflation and the threat of recession. Okay, skipped over a slide or two back here before I introduce our guest speaker. And actually, don't know what happened to it, but it was with Maureen and our marketing maven. So let's go to Maureen right now. And Maureen, can you take it away, please, and do our marketing moment for us today?
Okay, you got it. So here we go. So what we're going to do today, Kelly, is I'm looking at something that happened within the first few weeks of when the pandemic hit. And Kentucky Fried Chicken, you know, their slogan, which was created by Colonel Sanders 64 years prior, was Finger looking good, right? We've heard that a lot through the years, I think. And so they decided that that wasn't going to be really good for, you know, in the environment we have with COVID, who wants to be sharing chicken when someone's licking their fingers. And so they decided, they got really creative. I think this is so fun how creative they got with it. And so they put, this is their first ad they put out that says, you know, that thing we've been saying for 64 years, you can just ignore it. And I remember seeing some things they had where they had the slogan on there, but it was all fuzzed out so you couldn't read it. So that was at the beginning of it. But what they did was they decided to pluck slogans from other companies, and then they came up with the hashtag until we can finger lick again. So what happened, and it was outside the US. I'm going to show you several of them here. And what I want you to do is I want you to guess who the company is that they plucked them from and put it in chat. It's just going to be something fun. And they got a lot of media attention, a lot of attention on social media. It was PR and marketing gold. So let's just dive right into it. Oh, I guess I should start this. So let's see. There we go. All right. No more tears. Who do you think that one is? Anybody want to toss something in the chat? Okay, let's see what we got. That's right. Maisie and Chris and Cameron and John. Okay, you guys are you're right with it. It is Johnson & Johnson baby shampoo. All right, so the next one. Let's see here. Now, you can tell who the company is, but can you tell me what product that they represent? Specsavers. Yep, eyewear. That's exactly right. Thanks, Chris. And Trista, very good. All right, let's go on to the next one. If I can get it to go. There we go. You're not you when you're hungry. I have a friend that tells me that all the time. She'll say, you're hangry, you need to go have one of these Snickers. That's right. Thanks, Shiny. I apologize if I goofed your name up. Maisie, John, that's terrific. Everybody got the Snickers here. Let's see, I think I skipped one. Come on. There we go. Just do it. And this is actually parked. This is in Britain, actually in London. I beg your pardon. It was in London, and they were parked right out front of this company. Yes, everybody. It was Nike. Shiny, Maisie, Cameron, Chris, Trista, John, Bruce, Karina. Thank you. Yeah. Can you imagine being parked out front? They did one at McDonald's too, but I didn't find that picture where it was, you know, I'm loving it. So they had parked that same van out in front of McDonald's. So let's see if I can get the next one here. Gives you wings. This was in South Africa. And on this one, you can see where this was taken off of a post that they had on social media. Yep, it was Red Bull. Boy, you guys are on fire today, all of you. That's great. Thank you. John, Bruce, Kern County Black Chamber Commerce staff, Chris. Thank you, everybody. And then I think I have one more. If I can get there. Yeah, because you're worth it. So which one's that one? That one, I got that one wrong when I had to cheat and look it up. Oh, Chris, you got, okay. Boy, you guys are, Chris, you're right. It's L'Oreal, but it's actually L'Oreal Paris. See who else got it? Chris D, Kern County Black Chamber of Commerce. You guys are great. Anyway, so there you have it, Kelly. That's our fun marketing moment today. The thing is, you know, when you have something that isn't really going well, where that's of a magnitude that we have with the pandemic, then, you know, you can try to make something out of it that's creative. They even had some of the other companies who were, you know, diving in on it and just had a lot of fun with it. And it lasted for about a year before they took back their slogan, you know, finger licking good. So Anyway, thanks everybody for participating. You got any questions, Kelly?
That's great. I got one myself.
You do?
How about, did they use plop, plop, fizz, fizz?
Not that I found, no.
No Alka-Seltzer, huh? Okay.
No.
Okay, well, thank you, Maureen. And I am going to now introduce our speaker here today. Come on over here, Craig. It's great having you 2 weeks in a row in the same room with the guest. It's great. And gee, I don't have your bio in front of me now, so now I have to introduce you from what I know about you. So this is Craig Howells. Craig has worked with a number of banks that I've worked with during my small business career. I tend to work with lenders who I know that get deals done for our clients, and Craig has been one of those guys. One of my favorite deals of all time, about 20 years ago, we worked together on a lodging property up by Yosemite. And this lodging property had been around about 30 years. And when we were done doing a little, I don't know, about a $400,000 remodel loan that they've continued to do good the last 20 years. Actually, what happened was the owner came up and said, I started this 30 years ago and I never was able to get a small business loan. And those are the satisfying moments. And those are the reasons I work with people like Craig Howells. Craig is currently the SBA loan division manager for Mission Bank. And he's working with a number of different programs and a number of state and federal programs. So it's interesting, and it's great to have a local lender that is going to be engaged in SBA and other type of financing. Craig does have his master's from Fresno State University. He reminds me of that all the time. I tell him that, it's too bad it's not with the Harvard of the San Joaquin Valley, CSU Bakersfield. He seems to do okay, and he has his bachelor's degree from the University of Pacific, not too shabby either. So Craig, why don't you take it away? Maureen, start to share Craig's slide, and away we go.
Hello, everyone. Speaking with you from sunny Clovis, California, where I grew up, went to high school here. So down here with Kelly, and we are enjoying ourselves here in this conference room. So first of all, thank you everyone for attending today's event. This is my first time presenting to you as the SBA Division Manager with Mission Bank. I was formerly the SBA manager at Suncrest Bank, and that was purchased by Citizens Business Bank. So anyway, this is just a quick snapshot of what Kelly had already said about me. I have over 30 years of banking experience. It's probably easier to find a bank I didn't work at than list the ones that I did work at. Anyway, spent some time at Wells, B of A, Citibank, Heritage, and Suncrest Bank, and now I'm with Mission. So anyway, next slide, please. Okay, next, let's talk about the history of Mission Bank. All right, I started here in January of 2022, which is this year. So I haven't been here more than 6 months, but the bank was established in Bakersfield in October of '98. And then we currently have 7 locations. We are proud to be opening our Visalia office this week off the 178 in Acres. And we'll be a full service office there. And I'm happy to say that the staff there will be pretty much everyone that used to work at Suncrest Bank with me. So we're about $1.8 billion in size, which makes us a pretty good sized community bank, and we can handle large transactions. And we're about 129 in employees currently. So we are a growing bank, and we have a bright future ahead of us. So next slide, please. All right, just kind of, this is just a, almost like a Maslow's hierarchy of need chart. We're just kind of just showing you, that my department, including myself and 2 others, we have a lot of SBA experience. I used to work for SBA as well in Fresno, and then I've been in SBA lending since '99, and the other people I have working with me also have a ton of experience. So we're here to serve you and to help you, and so that's the purpose of that slide. So next slide, please. And this is just, saying that we try to customize our credits to our customers. we like to sit down, we like to get to know them, kick the tires, and then, decide, this may be the best product for you. It might be a line of credit. It might be that, hey, it's not a good time to borrow. Why don't you wait another quarter or two? We have those conversations as well. So next slide, please. All right. So first of all, I'd like to start off with discussing the SBA 7A loan program. That's kind of the bread and butter program for SBA. Basically, the 7A loan program can we want to call it kind of like the catch-all program. You can do a lot of things in this program that you can't do in other programs. So typically the loans are between 7 and 25 years amortized, or the terms are. What they can be used for are the following: general working capital needs, buying equipment, new and used, doing furniture and fixtures, such as, let's say you're leasing a building and you need to, do some TIs and stuff like that because the landlord won't pay for those. You can get an SBA loan for that. And then, the other stuff, buying buildings and then refinancing debt, as long as it meets certain conditions, which are, typically we have to improve cash flow by 10%, or there has to be a balloon coming due. Those are just some of the reasons or how you can get debt refinancing accomplished. So next slide, please. Oh, perfect. And these are just kind of a range of rates. They're not, I'm not saying that these are hard and fast, but usually the loans that we do are usually 10 years for, working capital and equipment, because the economic life is usually 10 years or less. And so the loans that usually go 25 years or so are real estate, and loans can go up to 5 million, and the loans are fully amortized. One of the points I wanted to make was that if you have a loan greater than 15 years in term or maturity, there'll be a prepayment penalty for the first 3 years. But you are allowed to pay up to 25% of the original principal per year without penalty. So it does make an attractive program, because most conventional loans have a prepayment period of 5 to 10 years in many cases. And so the 7A is nice because you can get out of your prepay early, and then you can always refinance with a conventional loan later. So next slide, please. All right. These are some of the things that you can use SBA 7A loans for. The business must be for profit, first of all, so no nonprofits through the SBA 7A loan program. And, just a myriad of different businesses, retail, manufacturers. Those are just a few. Professionals such as, medical professionals, dentists, doctors, and all that stuff. In terms of, how the program's been used historically, hotels and gas stations, I would say that better than 90% of all the hotel and gas stations statewide have probably been financed by an SBA loan at some point in time. And the reason for that is because you can come in with less money down, as little as, 10 to 15% down. So less money out of your pocket, more money you can put into working capital and other needs like that. So these are just kind of a list of how this program has been used. I personally have loaned in every single one of these categories. So, and more. So anyway, next slide, please. All right, these are the kind of a punch list of ineligible loans purposes. So obviously you have to be for profit. So the opposite of that is nonprofit businesses can't use this program. But there are other programs you can use finance nonprofits with, and we'll get to that shortly. So these are just a list. I won't go through them all, but gambling type of institutions, businesses that engage in lending, and then if you've had a prior loss with the government, very difficult to get a loan, if not impossible, because we have to do a search, and then we do kind of a check with the government website, and it tells us if you've had a defaulted federal loan. It could be an SBA, it could be a student loan, could be a home loan that has some kind of federal guarantee attached to that. So anyway, next slide, please. All righty. So in terms of how we look at deals, the underwriting, and this is, like I said, from 20,000 feet looking down. So, but cash flow is king. We're looking for the primary source of repayment. Typically, we're looking at historical cash flow from 3 years tax returns. And so we're trying to get a coverage ratio there of typically 1.15 or higher, which basically means that you're able to cover all your debts by 1 times plus have about 15% left over for other incidentals. Collateral, that's something that's also looked at, but it's not a deal breaker. So SB has rules in terms of us taking collateral, lien on the collateral. So if you buy equipment with SBA proceeds, we're going to want to lien on that equipment. So pretty much anything you finance with the SBA loan, they're going to be looking to secure it with that asset, which makes sense. So, and then additionally, I think I mentioned briefly that you don't have to have it fully secured. That's one of the beauties of SBA is that there's a guarantee provided to the lender. So the banks are willing to take on more risk even without full collateralization. So, and then just running through the rest of the topics here, there are, financial ratios that are kind of looked at by the bank, but there's not really any specific covenants within the loan agreement. Usually that lenders use. They usually don't have current ratio and debt to worth covenant requirements in their 7A loans because most don't want to have to track for that. But anyway, thing we look at is management history as well. And what I mean by that basically is that we are looking to see that the individuals or the partners or whatever involved in the business have experience in that industry. We want to see that, typically you have, 3 to 5 years experience in the industry would be ideal, or you hire that management experience and they become part of your business. So it's very key. To me, it's one of the most important things to know that you know what you're doing, because it gives us comfort in the fact that you'll be able to repay the loan. And then we also look at your credit history as well. There's no really hard line as far as the credit score number, and we're talking FICO, Experian, that kind of stuff. We're looking to basically see that everything's paid as agreed. You don't have a bunch of charge-offs and BKs and stuff like that. We can look at that on a case-by-case basis, but generally speaking, you should be current when you apply for a loan. And if you have, some stuff in the past, you'll want to be able to explain that and maybe in a written format. So anyway, that's it. We'll move on to the next slide, please. Typically what you're going to find, and this pretty much applies to all loans. So, we're going to want to get tax returns for 3 years, and then an interim statement from the business applicant. Now, if you're buying a business from somebody else, you're going to want to get this from them, and that'll be a requirement. And then a personal financial statement on the guarantors, pretty much anybody who's going to be 20% or more owner. And then the resume, which tells us if you've got the experience or what your experiences are in relation to the business that you're applying for. And then an executed 4506C form, which is fancy for tax transcripts. We basically want to see that, and that the government requires this, that we can match the numbers from your tax return with the IRS transcripts. So anyway, most people, it does match up, but there's occasionally some situations where they don't. So we will typically get back an EOI or letter of interest to people within 5 to 7 days of receipt of this information. So next slide, please. I have 3 real quick examples of using 7As that I've done historically. Gas station purchase, it was non-branded. Borrower came in at 15% down. It was a 25-year loan. And then we priced it at Wall Street Journal +2. At the time, it was about 6%. Prime, as you know, is at 4.75 right now. So that rate would be higher. Next example, please. This is you typically see a lot of franchise businesses financed with SBA. It's a Subway sandwich shop I did in Visalia. Purchase price was $450. We had the borrower come in with 20% down. we financed the loan for 10 years at Wall Street Journal Prime plus 275. And like I said, the rates are slightly higher now, but it's a great way to get financing for a franchise business. Next slide, please. Medical practice. I did this loan last year. A startup physician in Visalia needed some money for working capital. He put in about 20% of his own cash. The deal ended up being a 10-year deal. And then his office is fully running and he's doing quite well right now, thanks to an SBA 7A loan. Next slide, please. I'm going to touch briefly on the 504 program. We do a lot of them at Mission Bank, and we're the leader in Kern County and have been for quite some time. But anyway, the idea of the 504 loan program is they want to help finance assets to promote growth and job creation. And so one of their requirements is for the portion of the loan that it creates a job for every $65,000 of that portion that's financed by the SBA. So anyway, that just kind of shows you how important it is for job creation for this particular product. But anyway, as far as how the loan can be used, buying building or land or facilities, equipment, and make improvements. So that's kind of how the program can be used. So next slide, please. Exclusions, you can't use for working capital, consolidating or repaying or refinancing debt, speculating or investment in rental real estate. Now there is a caveat to the refinancing of debt. SBA, they do have a 504 debt refinancing program that is very specific, and but what we're referring to here is like consolidating some credit card bills or wrapping up a couple equipment loans. That's what we're talking about here. But next slide, please. Eligibility for profit business, just like the 7A loan, you must be a for-profit business. And then it talks about here some of the requirements. And actually for this program, as well as the 7A, you need to be considered small. For the 504 program, they look to see that you have a tangible net worth below 15 million. And then I believe they average it over the last 3 years to come up with that calculation. And then net profit under 5 million. Or you can use the SBA size standard chart that's readily available. So basically they want to loan to small businesses, and this is their way of differentiating. So next slide, please. Typical structure of 504, 50, 40, 10. This is like your vanilla bread and butter deal. Borrower comes in with 10%. Typically the SBA portion, that 40% portion you see up there, that can exceed $5 million unless it has it's an SBA 504 green program, which we won't go into detail here, but there are like a couple exceptions to that rule that if you needed to, we could go into. And then the third-party lender, there's no limit on the size they can do with that bond debenture by SBA in second position. So next slide, please. And then rates and fees. This is just real quick. We determine our rates as a lender. The SBDC, I'm not the SBDC, the SBA, the CDC down in Bakersfield, it's mid-state. Here in Fresno, SenCal is primarily ones that are used. They will basically sell a bond once a month. There's like a bunch of money that's pulled together, and that's how they establish their rate. And their rate on their second loan is usually fixed for 20 to 25 years. So anyway, next slide, please. An example of a quick 504, just $1 million, and then 500 first, 400,000 CDC deal in second, and then the borrow injection of 100. So it's kind of just like the last thing we looked at. So next slide, please. All right. So this is another program that's being used. It's the State Small Business Loan Guarantee Loan Program. One of the companies that I've used this program with is Valley Small Business Development Corp. And basically, what this program is very similar to the SB 7A loan program. What the little difference is, it's guaranteed funds from the state of California, and you can use it to buy real estate, do construction and make improvements to real estate, buy equipment, get some working capital, and you can also use it to refinance debt. You just have to show that there's going to be an inherent benefit to refinancing this debt. All right, next slide, please. Qualifications are basically have a good credit history. It doesn't have to be perfect. Repayment ability, typically you're going to see that 1.25, 1.15 is probably sufficient. And then they will be looking to see that it's collateralized. So this loan is, like I said, very similar to the SBA 7A loan program, but it's provided by the state of California. Next slide, please. And here's kind of the parameters of it. We already talked about having a good history, good credit history. The loan is guaranteed 80% by the state of California, up to $2.5 million for either a term loan or a line of credit. The rates are set by the lender, and then there's a guarantee provided to the lender for up to 7 years. So after the 7th year, the loan is not guaranteed any longer. Typically speaking, most lenders will make the loan for 7 years. Now they can amortize the loan longer, so there would be a balloon due, so you'll have smaller payments. But most lenders want to have the benefit of the guarantee. And usually at the end of 7 years, a lot of them will refinance the loan conventionally if payments are being made on time. Nonprofits are eligible under this program, unlike the SBA 7A loan program. So that does make it pretty nice as another alternative way of financing a business. And a lot of times we use this program to, if somebody's used up all their SBA eligibility, which is $5 million roughly, we put people in this program too. So anyway, good program to have. So next slide, please. These are just the fees, 2.5% guarantee amount. So basically you take 80% of the loan because that'll be the guarantee. So if you have a $100,000 loan, you multiply that by 80%, which is a guarantee, then you multiply it by 2.5%, and that's the guarantee fee that's paid to the state of California. And then they also charge a $250 documentation fee. And then as far as the bank charges, we may have our own fees and or doc fee as well. So that's just kind of generalization of the fees. Next slide, please. All right, USDA loan program, business and industry loans, rural lending. This is a great program. And what it's designed for is to provide financing to those in rural areas. What happened is there used to be a time where lenders would try to avoid lending in rural areas, and it's because the properties are harder to sell in the event of a foreclosure than properties located in larger cities and stuff like that. So this program helps to provide assurances to a lender that there's a guarantee there and to make it more attractive. So this program, you can finance for-profit businesses and nonprofit. So unlike the SBA, you can do a nonprofit in this program. And then these are just some of the things that can be financed under their co-ops, federally recognized tribes, and anyway, that's just kind of a real basic nutshell here. Next slide, please. All right, you must be a citizen of the U.S. or a legal permanent resident, and then or private entity borrowers must demonstrate funds will remain in the U.S. and the facility will finance or create new or save existing jobs. So anyway, what kind of the underlying theme on these programs is they really want to help develop and generate jobs, save jobs, and then everything is really geared towards helping the United States companies and citizens. So anyway, next slide, please. Let's see, eligible areas, rural areas not in a city or town of the population of more than 50,000. That's kind of the cutoff. So what happens is the government does the census, a census, and I think all of us have received, those emails or something in the mail. And so they do a census usually every 10 years, And so that is how they track this data here. One of the cool things is borrower's headquarters may be in a large city, for example, and they open up shop in, let's say, a Wasco or a Shafter or something, because because it's where the project will be. The fact that the headquarters may be in Boston or LA or something, it won't exclude them from eligibility. We have a special website we go to, and you basically just plug in an address, and it will tell us if the site is eligible. Because surprisingly, even in cities, they have areas that are like, what do I want to call it, county islands. And these county islands within large cities make them eligible, which is kind of strange, but I'll show you an example of that coming up. Next slide, please. Eligible uses, much like the other programs, you can buy machinery and equipment, do some debt refinancing, purchase and develop land, and then business conversion stuff. So the idea is that, that they want to do things that help generate cash flow and save or create jobs. So next slide, please. Ineligible uses proceeds, no lines of credit, no owner occupied or rental housing for the B&I program. There are, there's another USDA program that I believe is for housing, but this program doesn't allow that. Can't do golf courses, churches, and that kind of stuff. So anyway, this is just a short list. Next slide, please. Collateral. They are going to want to see collateral, and they're going to want to see if the lender does a discounted collateral calculation, which basically is fancy for basically taking, instead of taking the 100% of the appraised or fair market value, they're going to want that discounted to a degree and then lend against that figure, because they don't want to do 100% financing. So anyway, next slide, please. Basically, loan terms, lender and agency agree to a loan term based on the economic life. So on an appraisal, there is, within the body of the appraisal, it'll say what the economic life is, which is fancy for how long they expect the building to last. And so lenders do not want to lend beyond that economic life. So, but anyway, the terms of the loans for real estate, for example, are they can go up to 40 years under this program, but most lenders don't like to go out that long. They usually like to go out 25 to 30 years max. Next slide, please. Interest rates negotiated between lender and borrower. Rates may be fixed or variable. If you do a variable, you just can't adjust it more than quarterly. So next slide, please. Fees, lender charges. Normally, what I've seen is usually they charge about a 1% fee. And then the USDA charges a 3% guarantee fee of the guarantee amount. And so typically the guarantee can range from about 70 to 80%. It's usually where I've seen it. And then the lender, this is not super important, but the lender will have to pay an annual fee of about 0.5% on the loan each year. And so I've never been in a place where they pass it on to the borrower, but I've heard that some have, but typically it's absorbed by the lender. Next slide, please. All right, I wanted to give you some examples of some of the B&I projects I've done. The first one is a Rite Aid that is non-owner occupied. It's an investor property. And this was I did this in Fresno. And the funny part was, this is an example of one of those properties that was on a county island. So as you know, Fresno is not doesn't have a population below 50,000. But when we stuck the address into this portal, it showed that it was a county island, which made it eligible. So that's just an example of B&I. Next slide, please. I did a packing house in Fresno, and for this one, we got a 90% guarantee. They had a special higher guarantee for the lender at this point in time. And this one was really cool because it basically saved 160 jobs or made them. But anyway, this is a great loan. Next slide, please. And this is one of my favorite projects too. This is a resort up in the Bass Lake area. And I did this for them. We had to close a loan within 30 days. And so this one made it a little tricky, but it's an example of a rural project, and these guys are doing great. So they're just doing terrific. This loan helped them get the project done during the last recession, when every other bank would say no. So next slide, please. That's just me. Bottom, that's my phone number there. And feel free to call me. Open it up for Q&A. And I want to thank all of you, all of the attendees, and thank Kelly and SBDC staff for letting me speak today.
We'll come back in here.
All right.
Well, that's fantastic. Boy, what a comprehensive list. And we might even have more loan programs that Craig's going to be administering before we get going. So if you have any questions, now's the time to go to the Q&A box, pop in a question, and ask Craig if he has a deal for you. Let's make a deal, huh?
Let's make a deal.
Okay.
Monty Hall said that, right?
One question I might have is just along the lines of, we always try to talk about, doing deals, but oftentimes people are denied. What is one of the more common reasons, and maybe even a reason that sometimes can be fixed or is oftentimes overlooked?
Well, I would say a lot of times is they don't have a business plan. If it's a startup business, they need to put together a sound business plan. We want to know that they know what they're doing, basically, because startup businesses typically are the riskiest in the sense that there's no historical financials to look at.
Mhm.
So if they put together a sound business plan, it really makes it much easier to make a decision. I've seen some people where they want to borrow, millions of dollars, and then they'll type up like a one-pager, and that's just, the more you borrow, typically the more in depth the business plan will need to be. Other things that have cropped up is, we're going to look at collateral, so be prepared to talk about what kind of collateral you might want to pledge. It may involve having to pledge your house, for example, and you got to be comfortable with that too. If you come in and say, well, I'm not going to pledge anything, then the conversation will pretty much end there. Talk about your credit. If you got a little bit of, if your credit history is a little bit sketchy or a little bit banged up, prepare a letter, describing what happened. Maybe there was a divorce. Maybe there was, I've seen situations where we had a partner that was crooked, or we had a theft in the business. We had an employee that stole, which affected the earnings. So just be prepared to describe why credit might be off or why there might be an off year financially.
Okay, great. A couple questions have popped into the box. Are loans available for new startup businesses?
Yes, the answer is absolutely yes. It's you'll want to do a business plan, and I would suggest that you contact the SBDC, and they have specialists that will help you put together a business plan with projections. But yeah, startup loans are done all the time.
Yeah, and they were really a lot more common back in the day, as Craig and I like to say. And the real key to that is those financial projections, because what you're doing with those projections is you're providing a financial snapshot of not only where the business starts, but where it's going to go over the next 2 to 3 years. And a lot of the assumptions that go into those projections are really important in making sure that the lender can see that you're going to be able to, at least from a projected standpoint, repay the loan and succeed, because they want you to succeed as well.
Absolutely, agree 100%.
Okay, next question. Does an EIDL or a PPP loan affect your eligibility for these programs?
Good question. Excellent question, actually. So the EIDL program, as you know, it came out last year, and it's a 30-year loan. I believe it's at 3.75% fixed. And so what happened is, depending on the dollar amount, the SBA took a lien on business assets. So if you're going to get a loan from a bank, it'll be important for us to know what collateral that the SBA took for that loan. Typically, the larger loans, we've seen them take liens on equipment, I think I've even seen it on real estate before. So now there is a little bit of flexibility there. If the lender decides they need that collateral to make the loan, the Disaster Relief Center out of Texas can be contacted by the lender to ask them for subordination. And it's pretty common that they're being asked for subordinations. And my understanding is that they try to be as flexible as possible. The timing of it is something that you need to factor in. We've heard it can take anywhere from 2 weeks to 2 months to get a subordination approved. So if it's, you may want to think about that and start that process early. As far as PPP loans are concerned. So how that would affect you would be is if you have a PPP loan that will not be forgiven for some reason, that would need to be factored into debt service. Now the PPP loans are at a low interest rate; they're like 1%. So, but the lender might have you on a short term, so the debt service would impact the deal. So, but if you anticipate that it'll be fully forgiven, we'll need to know that as well.
Okay, next question. What are the interest rates for the loan programs?
Well, they depend. So, for example, the USDA, the bank will set those rates, and they can range. Right now obviously it's a tricky rate environment. So, with rates increasing, I'm going to say on real estate deals, you're probably looking in the 6s right now. At least, and probably rising. And what people need to understand is I'm old enough to know that rates have fluctuated over the years. I've been in banking for 30 years. So the rates that we've experienced the last 5 to 7 years has been historically low. Back in the early 2000s, the rates that we're seeing now or we're starting to reach are kind of the normal rates. So we've kind of been blessed by a low rate environment. And so we're kind of returning back to normalcy, even though it's not fun. And then just generally on the other rates, the 7A rates, the SBA kind of dictates the maximum rates that can be charged. But basically you can probably expect Wall Street Journal Prime plus anywhere between probably 1.5 to 2.75 on 7A loans is probably my guess right now.
It is interesting. We talk about inflation, and I remember when I started back in the 1980s. Yes, back in the 80s, and I had talked with a client, an SBDC client at the time, and they had told me that they had received an SBA loan. And they showed me the documentation on there, and it was literally when interest rates were at an all-time high, like 21.5%. And this wasn't actually in the 80s when I talked to him. I talked to him more like in the 90s, and he had survived about 15 years with a SBA loan with an interest rate that was literally 24%. That was 2.5 points over the prime rate, which was 21.5%. And it was funny because I thought to myself, I had worked with businesses also that had received a very low or hardly any interest rate that had failed. And so it really comes down into really managing that aspect of the business and managing that debt into it. But it is really, we are going to see a time of higher interest rates of where, we're talking about rates going up again in the next few weeks. So it's going to be a reality. That oftentimes they will come back down again. And if you are in a variable rate program, which most business loans are, you have that possibility they can go up and they can also go down.
Good point. Yeah, and I will say that I'm not going to say this will happen again, but keep in mind the SB 7A loan program and I think the 504 loan program as well are probably the only loan programs that I know where the government came in and made payments when the economy really stunk it up. And so I'm not saying it would happen again, but they did. The government did come to the rescue of these borrowers.
Mm-hmm. Okay, I see that we ran over. So, and you know me, if I'm in the freeway, I don't like to be run over. So, Maureen has got a lot of things in the chat. She's got the nonprofit performing arts grant, information in there that you can grab. The Kern County Micro Business Grant is in there, and also some of the stuff that's going on in Mono County. She lists the webinars that are all time-stamped, and then also Craig's contact information, at least his phone number. So feel free to call Craig at 559-314-44095.
Thank you. I appreciate everybody's time this morning, and I look forward to talking to you.
Okay, check to see if we have any last questions, and we don't. So that's going to wrap it up for number 122. I'll be back next week. I won't have Craig with me, but next week we're going to have Mr. Cameron Bruce talk about the SBIR program. SBIR is going through some really big changes at a political level in the U.S. Senate. It's the program where the U.S. government gives out a couple of $1 billion a year in grants for small businesses. So we'll talk about some of the changes that are being considered, the opportunities that are there, with our special guest, Cameron Bruce, for next week. So for this guy next to me, Craig Howells, I'm Kelly Bearden. We'll be back next week for number 123. Have a great week, everybody.
Bye.